The market seems to be in wait and see mode, but joining me down the line to discuss his outlook for some currencies out with the fiscal shutdown is Neil MacKinnon. Neil, the Swedish krona, for example, lost more than 0.5% and was back trading above 8.80. Soft data has been improving here, but the fundamentals don't seem to be matched by the performance of the currency. Therefore, what is your short, mid and long-term outlook for the euro/SEK?
Well, I think that obviously the big picture is all about the fiscal stalemate in Washington, and that's really effectively dictating the key moves in the financial markets and in particular the currency market. As far as the fallout in terms of currencies is concerned, we've seen the US dollar index slide over the last couple of months, hit by not just fiscal uncertainty but also the uncertainty over the Fed's tapering intentions. So both US monetary and fiscal policy uncertainty hasn't really helped the dollar. Maybe sort of tentative indications that if we can get some sort of resolution, the dollar might consolidate and might recover. But investors are in wait-and-see mode. First deadline is Thursday, and then the drop-dead deadline is really the end of the month. So there's always the risk that the can be kicked down the road, so to speak, and that we don't get a clean resolution to all of this, which will stay on the dollar. As far as euro stock is concerned, well, last couple of months it's been trading a very narrow range. We're currently at 880. That's the top end of the range. It's possible that we might get some further gains near term, but to be honest, it's overdoing it. And unless we see sort of a convincing and sustained breakout of something around the 889, 890 level, then I think investors will continue to trade the range.
In Norway, IP fell by 0.7%. Although the NOK has been under pressure lately, the currency was not affected in any considerable way. If we look at IP over the past 3 months and compare it to the annual growth rate, we can detect a falling trend. It is obviously very important for NOK investors that this trend is turned around. Do you foresee this being the case?
At the beginning of 2013, the Norwegian currency has been on a downward trend against the euro, and although it's looking a little bit overcooked at the moment, in other words, if you've not been on this trade, you really are licking honey off thorns. But technically, just looking at the chart over the last 6 years or so, I can see a sort of a basic 38.2% retracement level around the sort of 836 level in the euro NOK, which is some distance from where we are currently as 814. But certainly it's not impossible, just purely from a technical perspective, for the NOK to lose further ground. But as I said, it's looking a little bit overdone. Much depends on the euro as anything else, and we do know that speculative long positions in the euro are at extreme levels. So I think some caution is the watchword round about these levels, I think.
So the currencies of Sweden and Norway slumped after reports showed inflation pressures ease in the largest Nordic economies, cooling bets that interest rates will rise. With some analysts saying the Scandies are going out of fashion, how do you expect these two currencies to perform against one another?
The big problem, particularly in times of financial stress, is one of liquidity, and there's just simply not the liquidity in the Scandi crosses. So that's why during periods of risk aversion, you'll typically see investors from an FX point of view heading for the Japanese yen or the Swiss franc. The US dollar is also a safe haven at times, but I think there's certainly been sufficient uncertainty over the Fed's tapering intentions. The more recent stalemate in Washington doesn't help either. So dollar has been on the back foot, but I think that as far as fundamentals are concerned, the Scandis get caught up in this bigger picture, and it's very dangerous, I think, for investors to make currency decisions purely on local fundamentals against this backdrop. But generally speaking, although the NOK has sort of been very much on a downward trend against the euro, I think that does have the potential to make a recovery. It's very much driven by oil prices and by flows on the sovereign wealth fund, and I think at some stage there's probably the potential for it to make a bit of a comeback.
And not forgetting the fiscal situation in America and the fast approaching debt ceiling deadline. Now, positive signs in the global and European economy should lift export expectations and boost the euro. But as we enter the 14th day of the fiscal shutdown in the US, what is your outlook for the euro dollar?
Yeah, the general view in the markets is that they're hoping a last-minute deal can be done with regard to the upcoming deadline on Thursday, although that's not a definitive line in the sand. There's every possibility that this could drag on through the rest of October, but that's when things begin to bite. And at the beginning of November, there's quite a substantial amount of, think about nearly $70 billion worth of Social Security payments, military pay that is due. And then in the middle of the month, there's quite a sizable $30 billion coupon payment. So that's when the worries of a technical default come into play. At the moment, I think the markets are taking the view, as has been the case with previous fiscal disputes in Washington, that there is some sort of last-minute deal, even if that last minute is at the end of this month rather than midnight Thursday. Obviously, if the scenario that all ends well is not the correct one, then I think the dollar could easily come under pressure, especially if the credit rating agencies push America into a so-called selective default. And then the situation might be that the euro is the beneficiary of all of that. I'm not sure that German exporters or Eurozone exporters would like to see euro-dollar above 140. In fact, I'm pretty sure they wouldn't. But you could have a situation where a dollar slide pushes euro-dollar above the 140 level, and that would be pretty hurtful for the Eurozone economic prospects. But it's not impossible. I think for the time being, investors are just sitting on their hands, they're just waiting to see what comes out of Washington and then make a decision. And I think it's as simple as that.
Neil, lovely to speak to you once again. Thank you so much for your time. Well, viewers, we will be keeping you up to date with the very latest in the US government standoff, so please do keep clicking back to Dukascopy TV. Goodbye for now.